Hello everyone, today I'm gonna talk about a smart money pattern which has really great percentage with almost 80 to 90% success rate. This is kind of a reversal strategy which is so simple and easy to follow cause we can arrange the entry with a limit order so you don't have to spend hours in front of a PC to execute your order. But before we start, I have to mention a disclaimer. This video is not a financial advice. I'm not a financial advisor. All the contents in this video are for educational purpose. As you see on the chart, we need 2 swings and a complete retracement until to the starting point of the pattern. We execute our order with a limit order on number 4, where the actual movement of the pattern starts. Here we expect a movement to the number 3, the top of the pattern. At the bottom of the chart, you also see a supply-demand zone that rejected by buyers several times, and this zone also helps us to secure our stop loss. Actually, this supply-demand zone is not part of our strategy to execute the limit order. It's not one of the rules that I'm gonna explain on the following charts, but its presence is advantage for a long position here for sure. This kind of a swing almost always can be seen on any pairs. But the secret of this pattern to become a valid one is the breaking rule of the first wave. The first wave should break an important level, then make a small retracement to create a swing, then start a strong impulse to create the second wave. Here on this chart, as you see, the movement from 0 to 1 doesn't break the horizontal level, only breaks the last lower trend line, but I decided to enter this position cause the second wave, the impulse from 2 to 3 was really strong, and although it's not a must, the second wave also breaks another resistance level that also increases the success of the strategy. From the 0 level, the starting point of the pattern, we execute the position with a limit order. When the price makes a downturn to that point, our stop loss should be slightly below the supply zone, or if this kind of zone does not exist, the green wick of the candle seen on the left part of the zone can also be used to choose a stop loss level. When it comes to profit, the top of the pattern is the highest target, but I prefer to take partial profits during the movement. I personally prefer to take my profit partially cause the market is so volatile and unpredictable. Let's add here a professional trader saying, trading is constant regret. No matter what you do, you're never happy. Even you make profit, you say, I wish I could keep it longer. This happens all the time. Although we lead the trade with a decent profit, you may have many regrets about your decisions. That's why I try to learn a lot about all professional traders' experiences. This is really important to deal with the market's forever changing, unpredictable movements. Trading is a challenge. You start making profit not after learning the patterns and price actions. You start making profit after you learn how to manage your positions. Cause opening a trade is easy, closing a trade is easy, managing that trade is hard. I generally divide my profits into 3 or 4 levels. When the price comes to 1-to-1 risk reward, I get my first profit and bring my stop loss to break even. I don't care if it comes back to take my stop, then continues upward trend, cause this is my style of trading. I trade aggressively. I bring 0 to my risk as soon as possible and keep following the trade with 0 stress. Every trader should have her own style. This type of trading may or may not suit you, so you should create your own style according to your characteristic. This is the most important part of becoming a successful trader that overlooked by almost every people who wants to learn trading. I do not copy trading styles of successful traders. I watch and learn from them and adapt to my own style, cause every single person's perception of taking risk is different from each other. This is an hourly chart and we mostly use this pattern on this time frame, and as you see in the following hours, the price reached to my 1-to-2 risk reward. Here I did not increase the level of my stop loss, but I cut the position once again and I keep my stop loss at break even. From this point, the price becomes choppy and this may annoy many traders, especially with the ones who have less experience on the market. But I guess it's okay. It annoys me a lot too, cause I don't like waiting for a trade to end in 2 or 3 days. That's not because being impatient Actually, because during those days, a market news can spoil all the market scores and the result of the trade turns into a luck or unlucky event. If you are lucky enough, the news helps you to reach your target or vice versa. So what to do here? It's not a bad decision to take all your profit in 1 to 2 profit range. Or if your nerves are strong enough, you may insist on waiting the pattern to complete. Third take profit zone, here is the nag of the top price. I can advise you not to take into consideration the wicks of candles on the top while clarifying the correct take profit point. Here is another one. This time we have a choppy part in the rectangle that I didn't consider it as a swing, cause as you see the price downward cannot even outreach the end of the green candle next to it. So our first wave is this, number 1. And after a slight retracement, the price goes to number 3 to create the second wave, then turns back with a complete downturn to our starting point. I should remind you that without breaking an important price level, this pattern is completely invalid. This is the most important part of the strategy, cause while you are backtesting this, you may come across with failures, and this is mostly because missing the key point of the strategy. After the execution with a limit order, the price instantly hits our first and second TP. After a slight correction, then the third TP comes. Our target point to exit from the trade is again the neck point of the top. I must remind that you can determine your target at the top candles without considering their wicks. But this time, this setup is invalid cause the first wave cannot make a clear breakout to any important price levels. After a slight correction, the price keeps the reduction, then goes back to our entry point. In this situation, we also have a supply-demand zone that is known as smart money turning point. At this level, not because of the pattern, but in order to make use of the supply-demand zone, you may take short position, cause as you see the price tested that level several times before, but couldn't break the level. Let's see what will be the result is. Actually, with the help of the zone, the price reacted instantly and brought us to 1-to-1 reward. And 1 to 2 profit is also possible, but the resistance level, which our first wave couldn't break before, is now once again a strong obstacle for us. Best option here, if you don't want to cut all positions at least, you should cut half. And I want to show you another very successful pattern here, a Quasimodo pattern. This pattern looks like a head and shoulder pattern, but it violates the other shoulder price level. Then when it comes to the shoulders price once again, it creates a reversal pattern. Quasimodo pattern is one of the best pattern setups that successful pro traders use, and it has both good risk-reward ratio and high success rate. I'm preparing another video for this pattern, and I'm quite sure you're gonna like it really much. Thank you for watching our very successful smart money pattern, and see you in next videos.